Hi, risk types is divided into two categories, financial risk and non-financial risk. There are three major financial risk. One is market risk. Market risk is decline in portfolio value due to change in market risk factors. Market risk factors can be interest rate for fixed income securities, uh, equity prices, equity volume for equity securities, and for commodities could be commodity curve, future prices, spot prices. So these are few examples of market risk factors. Credit risk is the risk of counterparty defaulting, partially paying in his and her obligation. So the counterparty in a trade may not pay the obligation altogether, or pay only partial obligation. So counterparty credit risk is related to the generally related to the OTC product, and it credit risk can also occur in lending transaction if borrowers doesn't meet its obligation and doesn't pay the amount due on due date. So credit risk of not credit risk of happens when the counterparty doesn't fulfill its obligations. Liquidity risk is the risk of fall in liquidity of the business to operate efficiently. So their cash flow liquidity goes down, and uh, commitments and certain obligations of business are not met because of low liquidity. Non-financial risk, it could be an operational risk. It's due to failure of company system and procedures or from external event outside the company's control. Um, that's called operational risk, like uh, like IT hack in the system, or there are certain natural calamities. Due to that, business loses its operation, so they all fall under operation risk. Settlement risk. So in a swap transactions, Herstatt Bank received the payment but defaulted on making the payment. So the risk involved at the time of settlement of contract. So it's also called Herstatt risk or settlement risk. Model risk is related to incorrect model specifications. So these financial banks, they use a statistical model. In modeling, they make certain assumptions, and these assumptions may not be true in all the economic environments. So there's always a model risk involved. Sovereign or political risk, the risk of foreign government default or decline in making payments of debts. Regulatory risk related to unfavorable regulations, fees, or fine imposed by regulators. Tax risk of rise in ineffective risk of rise in effective corporate taxes. Sometimes tax rate goes up during financial year, so because of that. Accounting risk, uncertainty about how our transactions are recorded, and the potential for accounting rules like GAAP or IFRS for UK entities, and risk due to regulations can change. Legal and contract risk, the risk arising from failure to comply with statutory or regulatory obligations. So these are a few important financial risk. So in exam, you may have to pick out of four option or three options which one is a financial risk, which one is not a non-financial risk. Thank you.